is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and Anuj and Sonia are joining me from their respective homes. Morning, guys. Oh, well, actually, the global handover is pretty positive, and I think we presaged some of that. We got about, 80 points from the day's low yesterday, and to add to it, I think some 60, 70 points that the SGX Nifty is indicating. If the spot market is also as good, then we have got under our belt a good 100-point rally or 140-point rally from yesterday's lows. So maybe part of the big rally on Wall Street was presaged by the Indian markets. Well, what about India news? Well, over aftermarkets, we got Tata Steel numbers, and Nigel was speaking on Power Breakfast, and he pointed out that it's better than expected that the European business is turning EBITDA positive. Even if it is all a very small EBITDA positive, it's a good number. Lockdown easing, it's not a very great deal. We'll have to wait and see whether the Prime Minister has something else to say at 4 p.m. I think that will be the real big cue today, what the Prime Minister has to say at 4 p.m. and the markets will be, all agog in anticipation. As well, the positive news that we were just reporting, some of the consignments of some US companies like Dell, some Korean companies, although they're coming from China, are being cleared faster. So that's some bit of good news for the markets to work with, both on markets and on macros. So, morning, Anuj, is the market positioned to take advantage of the Dow rally?
Morning, Lata. Well, as you said, and you hit the nail on the head, the market did that yesterday, and we're pointing this out that the way European markets started to recover late and the Dow future started to recover, that the market perhaps thought that this global correction would be shallow in nature. However, I think for our market, perhaps we are in for that underperformance phase once again, and I say that with 2 or 3 data points. My basic premise is that yesterday evening the entire discussion, even among the fund manager community, was this ban on Chinese apps. Is this market now factoring in a bit of an escalation of the India-China standoff? Because if that is the case, then the market will go through perhaps one phase of underperformance. So this is an important development that you got to keep an eye on. Also, if you have noticed over the last few days, the smart money, the FI money has not only started to take money off the cash market, they've started to take money off futures, they've started to sell futures. You could argue that if these people don't get follow through, then there would be massive short covering. But early in the series, if smart money is taking such a stance on the market, most of the times they are right about the series. Yesterday also there was selling of nearly 2,000 crores in cash market, nearly 1,200 crores in index futures. I would give that a lot of importance. They unwound their longs about 14,000 and added about 4,000 shorts. And despite yesterday's late rally, the Nifty made a lower high and a lower low compared to the first day of the series. So as I said, purely from a risk reward point of view, after you have a gap up today and with the kind of rally that you were sitting in from yesterday's low, if the market gives you an opportunity, perhaps the smart trade is a sell on rally trade with 10,410, the first day high, as stop loss. If that first day high gets taken out, then perhaps you will see a lot of short covering. So purely from a risk reward point of view, you're now sitting in a zone in which your risk is about 100 points on the upside, but your reward could be easily 500, 600 points if the market has to revisit the 100-day moving average or the 20-day moving average, which sits somewhere around 10,000, and with financials leading that. So if you look at the profile of the mid caps, broader market as well, my sense is that this is a market in which you don't want to be chasing too aggressively on the long side. And as I said, purely from a risk reward point of view, what the smart money will do is perhaps sell this rally with 10,410 thereabout as stop loss. Sonia, good morning.
Hi Anuj, morning. Lata, morning. So I just had a follow-up question. Before that, of course, the SGX Nifty as well is indicating the start will be in the green. You have good global cues this morning. So, right now, a 50-point gain is what the SGX is suggesting for us. China has said that its factory activity, its manufacturing activity has expanded, and that's a very, very encouraging sign after what the world has been through. Now there's finally an expansion in activity. The Dow was also in the green. But Anuj, coming back to the point you made about this now, just for the very moment, becoming a sell-on rally market, and there's that congestion zone around 10,400 to 10,500. Is there anything in the Prime Minister's speech later this evening at 4 p.m. that could perhaps change things around? Or, as you said, with this heavy FII selling, have the tables now turned? Do you think the bears could take control of the market for the near term? I'm not talking today, tomorrow, but just for the very near term, you think the sell-on rally trade is something that could work out?
Yeah, I mean, the market could remain slightly excited because of that, impending speech from the Prime Minister, Sonia. But I just, tell you one thing. I'm going by the data, and the data, this kind of data I've seen after a long time. Because if you look at the options data, the call premiums are just not going up, even when the market's rallying, and the put premiums are not falling beyond a point. They are taking support at very crucial levels. In short, you've seen aggressive call selling, and at the same time you've seen put buying. Now, I keep saying that this data at times has to be looked at the other way around as well. What if these shorts don't get followed through? They will be short covering. But early in the series, when you see this kind of a data and you look at the risk reward, you come to this conclusion that perhaps this is now a bit of a sell-on rally market. If you take out the recent highs, then of course blue sky territory for the market.
Yep, take your point on that, Anuj, that, if we are fighting the Chinese aggression through economic means, then there is going to be a bit of self-hurt as well. And so that's perhaps what the FIs are smelling. They perhaps never expected that this would conflagrate so much. It would be a stare and dare on the border was the initial interpretation. But now that it is being, fought on the economy and not on the border, I think it's just as well that foreign investors want to wait and watch. So that could be a negative. My personal hope is that the Prime Minister today tells the citizens to go out and spend. I wish he says that I went out and had a haircut. I went out and had a pizza. I wish he says that so that people, it's enough of fear mongering. People just have to come out and spend. And, the Prime Minister is so powerful, so charismatic. He can make people come out at 8 p.m. and switch off their lights, bang, on plates to cheer up health workers. If he can, remove some of this fear, I think that would be very helpful. But anyway, we'll have to wait and see. There is also the Chinese standoff. It's quite possible that the speech dwells on that. All cards are on the table. And we will know earlier. It's not 8 p.m., it's 4 p.m. So that also is making some of the market men think, why is it not 8 p.m. this time? Let's wait and see. Well, with that, let's get to some expert equity advice. This one is coming to you from Neelkant Mishra of Credit Suisse. Neelkant Mishra says the Nifty FY20 EPS was 400 rupees, down 9% year on year, and down to the same level as FY18, which means 2 years wiped out. And it is 40% below the 650 rupees where it started 2.5 years ago. Apart from pharma and telecom, which have seen the least impact of the lockdown, every sector saw cuts to FY20. Neelkant adds that consensus expects FY21 growth at 16% and FY22 growth at 38%, and that the Credit Suisse team finds FY21 assumptions to be optimistic. He adds that as the virus is still spreading, it would drag down FY22 too. Credit Suisse is overweight on IT, banks, staples, and underweight on discretionaries, NBFCs and industrials.
Okay, let's also get you some money market views then. The rupee actually closed about 7 paise higher yesterday at 75.58 or thereabouts. For today, Bhaskar Panda of HDFC Bank says robust US home sales data and latest good Chinese PMI data will form the backdrop for today's action in Asia, including India. While stocks may get a boost from such a bullish sentiment, it may not be enough for the rupee to rally too much against the greenback. He is expecting an intraday range between 75.40 to 75.60 to prevail for today.
All right. And on bonds, Bhaskar Panda of HDFC Bank says RBI had announced switch of 10,000 crore of securities the impact on benchmark yields may not be all that prominent. He expects a 10-year benchmark bond yield to trade within 5.87 to 5.92 range today. But bonds at least will be higher. They have been falling for the past 2-3 weeks. The switch announcement yesterday after market hours is going to be bond positive. All right, that's on all the financial market cues. But here now come the political economy cues. As the standoff between China and India continues, Indian government, as Anuj just alluded, has banned Chinese mobile apps like TikTok, most important WeChat, UC browser and cam scanner. The reasons, of course, are that these apps pose a threat to the sovereignty and integrity of India. Ashmit has that entire list. Ashmit, go ahead.
Right, so extraordinary measures being taken by